Hey, Stat Nation, what's going on? Happy Sunday, happy weekend to you all. Hopefully, everybody had a chance just to get rested physically, mentally, and spiritually. Going to come at you with a market overview for this coming week. Again, this is not financial advice, it is for educational purposes. We got a big week coming into this week FOMC, CPI, and other events happening. We have some Fed speakers again. Last week was a blackout period. I will say that at least earnings is pretty weak this week, meaning that there's not a lot of earnings to begin with, and there's not a lot of earnings of interest for me personally. I think you have maybe two or three. Adobe's one of them. I think Kroger's one of them. Other than that, everything else is kind of just a off instance kind of earning release for a company. I know some of you may play it, but I would say the majority of traders here and those on FinTwit are not even looking at those, and they really won't move the market. So that is kind of a good thing going into this week. I will just say that I haven't really deep dive into FOMC yet, meaning that listening to what people are saying, looking at the numbers, analyzing, commodity prices, gas, etc., utilities, to really kind of formulate our own self opinion on CPI and FOMC and whatnot. But I can say that the consensus is that for this FOMC that it is going to be flat, meaning that they're not planning to raise anything, and then the other outcome is that they will do 25 basis point, right? 50 basis points not even discussed, and 75, 100 is totally out of the realm. And just a quick high level summary: if we come in flat, depending on how Jerome Powell sounds at 2:30 U.S. Eastern Time, that will determine whether we go up or down. If he just sounds neutral, we will go up. If he sounds dovish, we go up. If he sounds hawkish, we'll come down a little bit and probably recover the subsequent day. If we get 25 basis point, we will go down because the market is not expecting it right now, and it's not wanting it. Right? They do have that on the radar, but a lot of people, like I said, the consensus majority is expecting a flat hold for this month, and then a rate hike probably somewhere in August timeframe. But anyway, with that said, let's just kind of get into the video. So what you see on your screen right now is SPY on the daily time frame. The big thing I wanted to point out is probably what you've seen already is this. Right here is the Fibonacci charts, right? So we do use the fibs. I use the fibs. It's a great tool. We took from all-time highs 480 or 479.98 and to this year's low, which is 348.11. And if we do that, we can see that last August we hit the 6.8 and we hit the 6.8 again, right? So that's what people are probably seeing. That's probably what you may have seen from other FinTwitters that you're following. And what happened last time? We hit that 6.8. Subsequent day, we came down, touched it again, and then we trickled down, right? And then we had that big crash until we hit the all-time lows, right? So you can see that. And let's just kind of go over here now. Same thing. We hit that, we hit that 618 multiple times throughout last week, right? Every single time we hit it, we just rejected off it. We finally broke above it on Friday, but then all we ended up doing was reversing. And then this became a doji, right? A bearish doji. So which means that pretty much that there's an indecision and there could be a potential shift in price, right? Especially because, we've been uptrending collectively over the last, couple of weeks, even couple of months. We've been uptrending and finally hit a big key pivotal area, and we have this indecision potential shift in price. I will say that I do not believe that we're going to make a move like we did last August. And the reason why is two key factors. One, last August 2022, we had a bunch of discussions about the rate hikes, right? We, at that point, from last August till now, we had all those rate hikes, 50 basis points, 75 basis points, et cetera, right? We don't have that going into this round, right? That was a contributing factor to that whole entire drop, and then I believe, we also had, the oil discussion, and we have, the conflict with Russia and Ukraine, etc. This time we don't. And also going into this round, we have also passed the debt ceiling, right? The debt ceiling was a concern that if they did not pass that, the U.S. would default and we would tank. Well, we passed that. So going to this, and then you can see that, a lot of the companies have recovered pretty much all their losses over the course of the last year and a half, right? Apple made an all new time high. Nvidia made a new time high, or Apple maybe didn't. I apologize. But Nvidia did. Apple, the Fang names pretty much made a pretty much almost did a 180. They made a full recovery almost, right? Maybe shy, anywhere from 10 to 20% from the all time highs, which is not bad considering a lot of these names came down and lost a lot of their value over the last year, and they recovered. So I do not believe we are going to do that big massive pullback, to like the 350s, definitely not. We could pull back, to the like 415, which would be your 50% for this fib, and maybe even consolidate around the 400s, right? Unless FOMC is terrible, I really don't see any kind of catalyst that would push us down below 400 at this given point in time, right? Obviously, we have a lot of supply up here, and it showed us that every single time it came up, it just got rejected. But that is kind of what I am looking at on the larger grand scheme of things. Obviously, FOMC and economic data will help determine what is going to go on. But let's just kind of look at SPY on the more micro level as opposed to macro level, right? So I already pointed this out. It was a doji, bearish doji, right? We had an up movement. A thing to note is that we are overextended on the clouds, right? So we're about 2.8 points. So that means that it always comes back to the cloud at a certain point in time, right? You see that it was overextended, it started coming back. It always comes back. It's just a matter of when and how fast it does. With that said, we have a potential two down reversal going to this week. With that, keep that in mind. Just when I talk about that. For the weekly, we'll have a spinning top or a doji, however you want to consider this, right? It's always subjective. To me, I consider a spinning top just because the body's, decent size. Some people want a little bigger, like this one down here, where the body's a little bit bigger in this doji. But regardless, they both have the same meaning behind it, meaning that there is a potential shift in price coming. With that said, we are also overextended on the weekly, right? So the weekly, we're overextended by about 6 points, about 420, 419 area. So that is kind of what I'm seeing. And if we look at patterns, we can see that we broke out. We broke out of this rising wedge on, I think, Friday, June 2nd. We broke out of the small one. We broke out of the bigger one. Of course, we have this, supply zone, imbalance zone, liquidity up here with the August high, and then going into this fair value gap right here on the daily time frame up to about 435, 436. We could say that we might potentially be coming back here, right? We might be coming back to test out this trend line again, right? And if we do, we might use that as support and bounce. So that's kind of what I'm looking at for tomorrow as a potential down. But I will say that, momentum is still strong. Momentum is still bullish. So if we do come down, it could be a quick two down, just like we did on Thursday, where we came down, we made a two down right away, and then we just rocketed up and made that massive move up. And a lot of people are like confused by that because, well, it was two down, but we moved up collectively over the day. We may do a repeat of that on Monday too, right? We might make a two down, maybe come a little bit more, and then come back up and close around like we might come down to 427, 426, somewhere around there. Find some support and come back and close right around 428. Might come back into this market balance in time for FOMC, and then on Wednesdays when we have that directional move based on data, right, either up or down. So that's kind of what I'm seeing for SPY, the 2-2 down tomorrow, but whether it stays down or not is going to be the question. So let's go to Apple real quick. So a lot of this is, charts that have not changed since last time. So you can see that Apple made it did make a new high, right? So it broke all-time highs. That was January 2022, which was 183. It made 184, almost 185 on the Monday the 5th last week. We are in this, this zone, this neckline right here, right? We broke out of this rising wedge and we came back in and we're above it again. So just something to look at. What we do have for Apple, which is interesting, is that we are overextended. This is a doji. To me, this is doji. This is actually inside bar right here. This candle on Thursday was inside bar. This is a two up. So we have a 1-2-2 combination tomorrow going into this week, which is potentially going to be a 1-2-2 down, right? We might touch the support line and then bounce, or we might gain acceptance back into this wedge The thing to note is that we are overextended on Apple as well on the daily time frame, right? Not by much. We're looking at point and a half and whatnot. So again, so we have SPY hat potentially coming down. We have Apple also potentially coming down based on the setup. Let's go look at the weekly time frame. Weekly is a bearish doji or spinning top and is also overextended as well, right? We have a two up, another two up, maybe looking for a potential two down tomorrow on the weekly time frame because we have a spinning top that shows us price could be shifting as well, and also the fact that we are in this neckline in supply zone. Let's go to Amazon now. So Amazon is very interesting. So this same thing as the rest of the tech names, right? So we have this neckline that we broke out of. We broke through August high. We hit this gap and we filled it, and now we're in this this 128 130 zone. The next thing I'd be looking at right now is the fact that we did break out of this wedge, break out of the high, and we're cutting back down. Friday's action ended as a gravestone doji or inverted hammer. But the cool thing to note is that we had a inside bar on Thursday. We had a failed two up on Friday. So we have a 1-2-2 combo going into tomorrow as well. So two down is what I'm looking at for this. Maybe break below August's high and come back and touch this trend line, which is around 121.6, 121.5, depending on when the time day it hits this. And if we look at the weekly, this is weekly is actually really nice on Amazon, right? So this is look two up, two up, two up, two up, and this was two up, and then it ended up as doji, right? And we tapped this trend line. The cool thing that I'm gonna let you in on this little secret for Amazon is that we potentially have a pivot machine gun to the downside, and we let me before I explain that, let's just say that you can see that it's overextended as well. So what a PMG is that basically is that when you make consecutive uncontested move up or down, eventually you're going to have an opportunity where it just takes out all these highs. Obviously it's not going to do it in a week, right? This might be a longer swing play, meaning that you might be looking for a month or 2 month duration contract. These are week candles, right? 1, 2, 3, 4, 4 weeks, right? So you might be looking for a 6 week or 8 week candle, or 8 weeks of price action to take out all these candles, because that's why PMG, it just wipes it out, because once it wipes one, it just triggers stops out, and once you trigger stops, it kind of squeezes and flushes, right? Or I should say flushes. So not saying that it will play out, but that's something to keep a note of, especially with this doji. That just signifies that price is stalling and there might be a shift. So PMG on the weekly, 1-2-2 down on the daily. So again, that feeds into SPY potentially coming down, right? Everything's showing us that it might be a downside move coming into this week. Let's look at Microsoft now. Let's go on the daily first, and then we go. So again, I have not touched a lot of these charts, and changing it. So we did that's why you see a lot of patterns that I left on here have not been updated yet. You see those overextension lines. That was a gap. These are the necklines that we were looking at, right, for the inverse head shoulders right here. 1, 2, and this was the shoulder, and we broke above it. Now we have potentially a rounded bottom here, right? This is all-time highs here. We have this supply zone, this neckline, and we hit that and rejected off it, right? The thing to know about for Microsoft is the same thing, right? This inside bar, this was two up, potentially a two down tomorrow, right? So because this was an inverted hammer, what happened is that it was, even though it was bullish, buyers probably pushed it up, sellers came in right here and just rejected it and pushed back down. Be looking for the 21 EMA, maybe around 322.18 or 0.2. And then if we do break that, we have a potential to hit this gap, which is around 316.5 to 320. So we do have that. And then I'd be looking for it to find, a good support around 315, which is the 34 EMA on the daily, right? So again, 122 down on Microsoft on the daily as well. What we have here is actually an outside bar, bearish engulfing on the weekly, right? So that means bearish engulfing on the weekly, and it kind of closed on the lower side. So we have, some, potential to continue further down, right? So we are overextended by 6 points. So bearish engulfing on the weekly shows us that, look, we've pretty much been making nothing but uptrend since March, right? Massive week on March 13th week, and then another massive week after earnings, right? So pretty much from March until now, we made an 8 point run, right? Actually, more than that, almost. Let's see, where's this at? This started at 245, and this is at 338. That's where we touched. Obviously, we came back down. So almost a 100 point run in from March until now. So potential shift tomorrow or this week going down. Now, obviously, we could shift down the first couple of days, and the FOMC is good, and then we pump, right? Just something to keep in mind. Let's go to Google real quick. So again, that's why you see a lot of this stuff that's left on there. I don't touch it because it's all valid for me. That's overextension. So again, let's see. We did break August high, right? August high for Google's 122, and then we broke it and we hit this fair value gap up here, and we rejected, and we have this upward trend line, this red, right? We tapped it once, twice, three, 4 times, and then we finally rejected pretty hard. I think this is Wednesday. Yeah, Wednesday, June 7th. We rejected hard, and then the last 2 trading days, it's been just dojis and whatnot. This is actually a gravestone doji on Friday. Again, so this is a two down, two up, and looking for maybe a 222. Randy Jackson bearish to the downside again, break through this previous neckline, and then maybe go for this 21 EMA on the daily at 120.81. So again, looking for that downside on Google as well. It's no different than the other equities that we talked about, just because we had such a meteoric rise with earnings and whatnot. It's just, I think May 10th, yeah, Google went from 107 and then the following day it just jumped up to 118. I mean, there's just this gap here. So that is on a daily. Let's look at it on the weekly. Weekly is what is even better because it was a bearish engulfing, but it was an inverted hammer. So to me, that is a very strong sign that the bears are in control of Google for now. Doesn't mean that it's just going to come straight down. I think you might see a little bit of consolidation chop, and then you might see a further attempt down to try to close this gap a little bit, right? We are we are overextended. I don't want to say gap because that might confuse people of an actual gap, but we're overextended by 3.5 points, 3.6 points, somewhere around there. So we could close this out a little bit. Would like to see Google break that 120 and for further continuation down. Again, all things kind of align, right? The strat combos, the patterns, rejections off the fair value gaps and these support lines, the overextension, etc. Right? So it's just all kind of really aligns. And we can even say, look, here's the neck, inverse head and shoulder, neck. Now we're starting to form the other shoulder, right? So again, just looking at these equities very quickly at a very high level, we can see that a lot of things are setting up to seem like we are going to start pulling back a little bit, just because, look, a lot of people just says that we're in a straight bull rally and we're just going to continue up. And we all know that from experience that we can't continue in one direction continuously without any kind of pullbacks or contention, right? There's always going to be areas and times where they're going to test the market and it's going to see whether it can continue to in one direction or not. So again, look, that's not emotional. It's not biased. It's just looking at the data and what the data is showing us, right? A lot of the setups are showing us that we're either going to flush down or we're going to make a reversal down tomorrow or for the week and whatnot. So it's not us being wanting it to go pull back. It's just what the data is currently showing us that the market can potentially do. And obviously, the real tricky part is we have the econ data this week, FOMC, the big one, and we have OPEX on Friday, right? So a lot of volatility going this week, not just with one event, but just in terms of what is going to occur in this week, especially given last week was a very quiet week in terms of econ data, no Fed speakers and whatnot. So just something to keep a lookout on. And I think I already showed you guys Tesla earlier today, so no need to show you that again. You can look at my earlier tweet. But that is what I'm looking at going to this week. Let's just be prepared. Let's be ready. We will be able to capitalize on some moves and whatnot. And like I said, as we get closer to FOMC, I will start providing a little bit more details. And if you are subscribed to the YouTube, I already have a FOMC strategy that we use every single FOMC, and we have come out winning. And it's not just 10%, right? Most of the time, we're winning about 100, 200% on our trades based on this strategy. So if you are curious, you can sift through my video files and find that it's titled FOMC strategy. It works every single time. It's a matter of you knowing when to execute it and when to exit it. But nonetheless, thank you all for listening, for subscribing, and for supporting. So smash that like, subscribe, and smash the like on the Twitter and subscribe. That's where I post my real time updates. So thank you again. Talk to you later. Bye.